In Singapore's annual incomes and expenditures sheet, there's a line that's seldom seen in other national budgets. It's known as Net Investment Returns Contribution, or NIRC. In 2022, the NIRC was 22.38 billion Singapore dollars, higher than revenue takings from personal income taxes and rivaling the total from corporate taxes. It's also more money than what the government spent on defence, or education, or healthcare. Without the NIRC, personal income tax in Singapore could be twice the current rate. Goods and services tax could more than double. So your favorite cafe brunch fry-up? You'd fork out this much more instead. Yikes! So, what exactly is NIRC? The NIRC is half of the returns derived from investing Singapore's reserves. And responsible for growing those returns today are the Monetary Authority of Singapore, MAS, the Government of Singapore Investment Corporation, now known as GIC, and Temasek Holdings. But it's GIC and Temasek that are most focused on making the money. For the first time ever, our cameras go behind closed doors of these two organizations to meet the people directly responsible for generating a chunk of Singapore's national budget.
How does it feel to be responsible for 20% of Singapore?
Wow.
We ask everyone this, is it?
Stress.
It's roughly about 5:30 in the morning. It's a very precious time for me. It's the time that the US markets have just closed. The one price that I look at basically every morning is the US 10-year yield. And then of course the behavior of the S&P, which is the kind of a US equity benchmark. The world is really changing very quickly. So this time is useful for me because I get to synthesize a lot of the information that's happened overnight, and that's the kind of information I bring with me that kind of helps me through the day.
Dad, time to go.
Okay. My daughter, when she was in P2, she was taught about total defense in school. One of the pillars of total defense was on economic defense, and within that, there was the role of reserves. And so she rushed home from school that day and asked me, Daddy, is this what you do? So I was proud enough to say, yes, that's my day-to-day job. What does a chief economist do? Ultimately, shaping investment strategy. GIC is purely a fund manager, so the assets are still ultimately owned by the government. The ultimate objective of GIC is really to deliver long-term, real returns. The starting point in any investment strategy process is really a conversation about risk. And this is where we really engage with our client, our Ministry of Finance. And they tell us effectively how much risk they are willing to take.
And based on the government's risk preference, more than 60% of GIC's portfolio are in equities, which are basically shares in companies. The rest of the portfolio is made up of bonds and physical assets, like real estate and infrastructure. They usually come with lower risks.
We effectively have two big regions where our capital is allocated. So one is North America, where we have roughly about 35% of the portfolios. And the other big portion is actually in Asia ex-Japan, which is about a quarter, the two major global financial centers. The mandate that the client has given us exclusives from investing in Singapore. Such that In scenarios where the Singapore economy is not doing well, we can actually draw on the reserves which are invested outside of Singapore. So it really is essential for us to travel.
So I'm going to Manila to visit one of our investment in the region, ACEN, and it's one of our more significant investments. It's very critical for us to see the asset in operation and to see the problems and flaws so that we can improve the operations.
We'll see Edmund in action later when he lands in the Philippines. In the meantime, let's check in on a project that's taking off in the northern part of Singapore. You could say this is another feather in the cap of money-generating assets set to contribute to the growth of Singapore's reserves.
The rejuvenation of the Mandai precinct is one of the largest and most extensive projects that I've worked on.
We just recently opened our first attractions, the Bird Paradise. We took about 2-3 years, look at, for example, global attractions, what are the best practices. We then basically come out with our own small team.
Did up a new attraction concept to revolutionize the traditional way of observing birds behind cages. In Bird Paradise, we realized that there are no cages, and that is because we want people or visitors to enter into their space, to appreciate where they are in their most natural habitat, rather than for us to view them behind cages. I am headed to office.
Wait a minute, you don't work at the Bird Paradise?
I'm from the Enterprise Development Group in Temasek. For enterprise development, we are really thinking about how to grow the companies to really have a presence not just within Singapore but also globally. So Jurong Bird Park and Singapore Zoological Garden were two of the original 35 portfolio companies that Temasek acquired from MOF when Temasek was incorporated in 1974.
As a new nation in 1965, Singapore had to industrialize and grow its small economy quickly.
At that point in time, as part of our economic strategy, the government had to build up some companies to support our economic infrastructure. So some of the early companies you might be quite familiar with. The airlines, SIA.
You're a great way to fly.
Shipping lines, NOL. As well as telecoms company, Singtel.
Call 169 and turn up your life.
But over time, as our economy grew, the government also realized that it would be more important for the government to focus on governance. In the 1970s, the government decided to divest that 35 companies to a holding company, Temasek Holdings, to be commercially run.
So what we have here was the share certificate that was issued to the Singapore government back in 1974. It's basically official proof that the Singapore government is the owner or shareholder of Temasek Holdings.
And the sole shareholder at that. But wait a minute. If the Singapore government is the only shareholder, why are there two share certificates?
This was a refreshed design of the share certificate that was issued in 1974. This refreshed design was done in 2017.
Like its share certificate, Temasek's investment strategy has also been refreshed since it first set up office at the grand old former Fullerton building, with just a fraction of the staff it has today. From the 70s up until the early 2000s, Temasek focused on growing the local companies under its watch. But in 2002, Temasek set out its intent to invest internationally, to capture a share of the global pie. It opened its first overseas offices in Mumbai and Beijing in 2004. That year, investments outside of Singapore made up just under half of its portfolio. But over 2 decades, its overseas assets now far exceed investments in Singapore. A strategy that's also grown its total portfolio over fourfold. Today, more than 70% of Temasek's investments are overseas.
So that globally diversified portfolio is also an important part of Temasek's strategy to achieve growth because there are also many good investment opportunities outside of Singapore that they can tap on.
And then when you talk about global direct investments, you would have Tencent out of China, Visa out of the US, and Ardian out of Europe.
But hang on. If Temasek invests overseas and so does GIC, just how different are they from each other?
So GIC is the government's fund manager, a slightly more conservative investor than Temasek. Temasek is a pure equities investor. It would take on higher risk, but also that would allow it to achieve higher expected returns.
We could explain their different risk appetites using a game of football. Temasek invests mainly in equities and even startups. Higher risks, but higher returns. That's akin to having 5 strikers, but 2 defenders. It's an attack-minded approach, designed to score more and generate higher returns by having fewer defensive assets. GIC owns more defensive assets, such as bonds, to guard against market volatility. Okay, it's a bit of an exaggeration of their different investment strategies, but it explains why, when compared to GIC, Temasek's performance can swing more wildly from year to year. In recent years, Temasek has also started investing in startups, early-stage deals that promise higher returns if the company takes off, just like these. And since 2019, it has even gone into building its own startups. Temasek is getting into creating companies to catch growth opportunities in uncharted fields, like using AI to provide a hyper-personalized customer loyalty platform.
Venture creation, as the name suggests, is creation of a business that is actually not available yet, not available in tradable shares on the market or even in the private markets.
Come, let's earn points with you. It's so easy with you. I want nobody.
A lot of people know the U Rewards Club by now, but what they may not be aware of is the fact that this is actually an initiative that is developed and launched by a venture that's owned and backed by Temasek, Minden AI. For every dollar that I'm thinking of deploying today, do I reasonably believe that there's a path to this dollar becoming $2 in 5 years' time?
But precisely because Temasek has gone into riskier assets with high potential, Temasek's performance is often hotly debated by keyboard warriors.
Okay.
Comment number 1, Temasek lost millions of dollars on
Failed investments.
So I get questions about Temasek's investment performance even from my family and friends. And I think it's important to understand that every investment carries with it certain inherent risks.
And we also have a dynamic components that are future-oriented. We do not look at, for example, focusing on one investment or 2 investments. We really look at portfolio as a whole.
For us, I think it's very important to ensure that we are delivering sustainable returns over the long term.
We are not affected by the short-term spike or the short-term trough that gets everybody too excited.
We are going to visit the 120 MW Alaminos Solar farm that's just 45 minutes away from Manila. It's one of the largest solar farms that the country has that's being built by ACEN. So the solar farms that ACEN developed previously in 2016, the key issue was the cable that was being used to connect the solar panel to the capacitor was not well insulated. So there were issues with water which affected the energy output. In this new solar farm, they have changed the type of cable to improve the energy output and minimize the leakage. By improving the small processes, we improve the financial returns. I think the main point for today's board meeting is really about to understand ACEN's growth strategy going forward. It's always helpful to have the opportunity to get key updates from the management.
Well, Edmund, welcome. And there's been a lot of new developments while you were gone, where our vision is to reach 20 gigawatts of renewables by 2030. That represents 5x growth.
I'm 31 this year. I've been doing this for around 2.5 years. Sometimes I struggle with explaining to people what I do. For instance, the trip to visit our portfolio, to interact with management, and a lot more work that goes on beneath and deliver the right investment returns for the nation.
How does it feel to be responsible for 20% of Singapore's money?
We ask everyone this.
Stress. Because I want to do well.
I grew up here, I studied here, so to me it's a very heavy responsibility.
I've been in GIC now for about 11 years. I don't get to direct where the reserves are being spent, but actually seeing that contribution happening, financing day-to-day expenditure, being a meaningful part of the government budget on an annual basis, that actually ended up being a lot more rewarding. It's a privilege, and it's a great honor to really be part of that process.